Okay, welcome everybody to this evening's ACY Securities webinar. My name is Duncan Cooper. Tonight's webinar is live Forex market review, so let's get into it. For those in the webinar, please read through the disclaimer before we move along. If you're on our YouTube live stream, I cannot see the chat, but you're more than welcome to watch there, or you can follow the link I've given and join us in the webinar. For those in the webinar, hello. For those saying hello to me, hello in the chat. So any questions you can put to the chat box or the Q&A box. Or I'll move along if you don't know me. And you're watching, my name is Duncan Cooper. I'm a senior market strategist and trading mentor here at ACY Securities. And I'm a full-time Forex trader. I've been trading now for almost 20 years in the Forex market. Mentoring for more than 10. If you want to contact me, my email is there on screen, duncan.cooper@acy.com. Through the week, you can connect with me at our website, acy.com. Go to the market news tab or at ACY Securities Australia on the YouTube. Or if you want to connect with me personally, you can get me on my Linktree page. My page is down on screen. If you want to get access to the charts, layouts and templates I'm using for MT4, just contact Nathan.bray. His email's there on screen. And for those in the webinar, I'll put it in the chat for you. He'll only be too happy to help you out, set you up. All right, so of course, we first of all need to look at the news items for the day. It's been a big week for news. The FMC statement yesterday and the Bodge press conference yesterday and policy statements. My source is correct. Interest rates did increase by 0.15%. It actually tells you on here. And pairs to the yen have been moving down further. And no change in the FOMC interest rates, but hasn't quite confirmed a rate cut in September. But if the data keeps suggesting that inflation's downward ticking, then it's kind of on the table there for a rate cut in September from the Fed. Today, though, 9 p.m. for the UK pound, we have the BOE Monetary Policy Report, Monetary Policy Summary, official bank rate, and the votes. Expecting potentially a 25 basis point cuts. Already the pound's been moving down today in, I guess, in line with the outcome of that occurring. 9:30, we have the BOE Governor Bay speaking. So he'll be talking about, I'm sure, what came from the official rate. Maybe giving some guidance for the next month. Moving forward. So it's going to be volatile for pound crosses at that period of time. 10:30 for the US, we have unemployment claims. Moving into Friday on the midnight, we have the US ISM manufacturing PMI data. That could be volatile there too, for sure. And then 4:30 p.m. in the afternoon tomorrow from Swiss, CPI month on month, expecting a downward figure there. And then we have the job figures from the US at 10:30 p.m. So that's going to be another very volatile window. So still volatile items to come out for the week. It's a difficult week to get in. Need to be getting in at the right spots. Not getting in just in front of a news item. All right, let's get to the charts now. First up, the dollar index. Looks like whilst this may look on the day chart that we moved to a downtrend, we could be dealing with a bit of a false breakdown here. On the weekly chart, I've been monitoring this range where we've had a 7% pullback. And whilst we've had a down week here, back below this area of potential support, we are positive once more, back above the level. So all the news from the FMC yesterday may have pushed price down initially, and we've come back up. So it was looking a little bit like a false breakdown. I'm sure that's pulled back to a 62% area of that range, almost a 79% area there. So it's looking a little bit suspect, like a bit of a false break there. And if that keeps moving up, pairs to the US dollar will be moving down. And we're seeing that. We're seeing weakness on the pairs to the US dollar heading into London. All right, so let's get into the S&P 500. Hasn't quite come down into the area that I was looking for, but it has theoretically changed the day chart trend back up a little bit here. There's a minor swing occurred in here. Turning that back to up. So what I would be looking for now, wouldn't want to be buying at the top of that move, but if we're looking intraday, just want to get rid of that fib. This will run up here on a 4-hour chart. You could be looking for a pullback into the 62 area, 54.49 support. Do we come down over the next 24 hours? This area to be support for then the next push up. So we've been a bit consolidatory here, running up. We're now going to run down into this area to hold to move back up. So we'll be watching 54.57 down to 54.49 area there for support. All right, euro dollar. Difficult right now to get in if you're not already in, because you're at the bottom of the day. So the day chart, I might just leave that fib on for a second. We had a little bit of a swing here over the last few days. Down, Monday down, Monday, Tuesday down, Wednesday rally to the 62 level. Broken area of support. Here becomes resistance. And we're down into the 127 extension now. So really, selling should have been occurring up here if you're a trader, trading in the direction of this trend. This is a profit-taking zone at the moment, and dangerous area to keep selling down here, because it'll probably at least have an intraday bounce from this level. So you just have to accept what the position of where the market is at the moment. Don't have the fear of missing out because it's moving down. 107.61 is potential support at the moment for a test. We're only 17 pips away from there. We're already having a month. No, sorry, I'm going to correct myself. We're not having a month down. We're having a week down at the moment. Last month's low was here. So we could be coming down to challenge last month's low, down at 107.08. And coming down to maybe challenge this area here. All right. So you can see the 4-hour chart, it is down. If you wanted to look to get short at the moment, you really need to look at the 4-hour swing. I'll rally back up within this range. 15, and price keeps moving down, keep dragging the fib down. We've already done the 5-day average range. That's this level here. We're already below that level, so we're already getting stretched for the day. So we're getting close to putting the low of the day potentially. And, you're going to be looking to sell a rally. So I would look up to, perfect world for me would be, we have last week's low up here, 108.25 to 108.22. Now we might not get up there anymore. Now that we've broken below the figure at 108, any bounces may just get capped at 108s. And as well, we have 108 plus, this is Tuesday's low, Wednesday's low, all lining up with the 108 level here. So in a perfect world, I'd like to, be looking up here to sell. I just have to, be patient and wait to see where price moves back up to. We may only move back up to 108. The more we move down today, the less likely we'll get a rally back up to 108.22. The more likely is we might start to stick at the lows of the previous 2 days and then 108 for a rally, okay? Euro yen, difficult. These yen pairs are so overextended to the downside now, and you can see here the euro yen's pretty much at the bottom of the day. So you don't want to sell at the bottom of the day. This is the 4-hour chart. So just to put things in perspective on the daily, we might have to go to the monthly first of all. We failed at a monthly top over here. and we've moved below this monthly area, which could have been support, but we've moved below it. Now, the monthly trend is still higher bottom, higher top. So there is the possibility that even though we've had obvious strong selling, it may not change the longer term trend, which is still up. Till we break this low down here, the monthly trend doesn't change down. The weekly trend is already down, but the monthly is still up. That's the biggest time frame we have. So we are in the 62% area here. So, we could get support in here. We'll just have to wait and see how price action wants to react. Weekly chart, we've broken two bottoms. You can see once we broke below this low here, price came up to want to be resistance at that broken low. So same thing now, you want to watch at this low, 162.26. Does that become resistance now? So we actually came down to it yesterday. Now we've moved below it. So any rally intraday at the moment, if you want to be a seller, you want to see it capped at 162.26. And it may have already done that there. See this 4-hour move up here. Got a little bit above it and then it's sold back down. So it may not get back to 162.26 anymore now, but you don't want to be selling too low down. So to the 15-minute. I mean, it could come back to that level still. You can draw a fib across this intraday range at the moment. 79% level does overlap with this 162.26. So if you're prepared to be a seller at such low levels, look to sell a rally. That would be the area to look at the moment. Don't get trapped at, selling near the lows of the day. All right, that's what I would look at if I wanted to sell. Personally, I might prefer to see, I just want to go back to the day chart. Having had a number of days down, personally, I would much prefer to see to just sit on my hands and wait for 1 or 2 days up, like we had here, to put in another lower top area, because this is getting now overextended to the downside. All right, all time frames need to rally, even if we're going to continue moving down, and this is getting a little long in the tooth to the downside on a day chart perspective before having maybe 1 or 2 days up. So I would much prefer to wait for a day up so we can lessen the oversold nature of the pair. But if you're prepared to keep selling, you want to sell some form of a rally, and this would be the opportunity here. All right, getting into the euro pound, bit range bound. It's holding at last week's high. So let me just tidy this up a bit to the day chart. Of this range, we've come up to the 62 level. Now I did say to watch for a head and shoulder pattern forming on Tuesday on the 4-hour chart, and we're in that zone right now. So we've dropped down from the 62 level and swung back up. So to the 4-hour chart. I said watch for last week's high on Tuesday. Last week's high here, that little 4-hour top. Left shoulder head, 79%. Is this the right shoulder to trade down? So if you like the euro pound and you think that's the long-term direction, then there's a potential pattern here. You could be selling at the 79% level or as close as you can to it. Stop above the potential head. And then you're targeting to the 127 extension, or you're looking for a breakdown through support to continue the longer term move down. Bit difficult trading the euro pound, as a general warning. UK interest rates is going to affect the euro pound when that gets released. So do you want to be getting in right in the face of that interest rate decision? If the UK cuts rates and the market sees that as further selling pressure, that's going to potentially move the euro pound up, if I'm correct. So you might want to wait until that's happened. All right. To the pound dollar, you can see it's been selling off leading into the interest rate decision now. If they cut rates, we may rally back up because the market is kind of preempting the cut. And then we may rally because all the selling's already occurred. But to the day chart, in fact, if you haven't been following me to the weekly chart, first of all, we've once more failed at this level over here. So this is last year's high. We moved above this area for a couple of weeks, but then we failed. And then this third week here held there to move down. Whilst the weekly trend is up here, we obviously didn't like that price point at 129.95. So the 130 level is very heavy for the pound dollar. And if we're starting to get interest rate cuts, this could be a significant high point to maybe, this could be the final rally to this high for a long-term move down because of this major range over here. We're in the last year's high came up into the 62% to 79% area here. And of course, we were still in that area here too, but we could be topping out here to move longer term back down this way. So at the moment, whilst the weekly trend is up, it's a higher bottom, higher top into a sell zone. Day chart trend is down. Of course, it's very negative today. So we've been holding for 2 days at this area. Then we've broken. We've also taken out this little area of support here today as well. So we could be heading down to where we initially took the break up. So 127.02 is the number. Could be targeting there in the short term. I don't know whether we can get down there today, but we could be down there tomorrow. In any rallies, I would look for a move back to 128.06. Broken support becomes resistance. Well, 128.06, this is the fire chart now, up to this area here, 128.17. That would be my now immediate area to look for a sell, for a fib from there to there. Keep dragging it down if price keeps moving down. Could just get back above the area. I mean, it might come back up to the 62 level, but we'll have to wait and see where the fib levels lie once price rallies back up. You can see already today's range has already been done. We've exceeded the average 5-day range by probably at least 62%. So it's having a very good day down. I mean, we could still get down to 127.02 today, that level I was discussing, but you want to sell a rally. You don't want to be selling at the bottom of the move. And of course, we've got the figures coming out, the interest rate figures coming out. So you're looking at some levels, 128.06 to 128.17, this area later in the day. If we rally back up, would be great. Don't get the fear of missing out and trying to sell at the bottom of a day where we've already potentially well overstretched. Pound yen will be the same. It's well overstretched probably for the day. It's well overstretched for this move down maybe on the day chart here too. So on the monthly chart for the pound yen, we've moved back below this top. All these yen pairs on the monthly charts are showing you outside monthly reversals to the downside. In terms of trend though, we still have higher bottom to a higher top. It will have to break this low before we know that the monthly trend's turned down, but it could just be coming down maybe into 86.75 here. to be support. And you could monitor the fib levels of the monthly range too, 79% level just underneath. But as we go through the time frames, the weekly chart's taking out one weekly low, heading towards the next one here. So next probable level of support here is at 189.98. That would be a good target if you're short at the moment. And there's a 62 level of the monthly range. And then we have to wait and see, does that start to want to hold within the monthly trend, which is still up, even though weekly trend's down, day trend's down. All right, so daily is getting overextended. If you're not already short now, you know, there's a high probability in this area we could bounce. So from a rally perspective, this 193.52 level, what that level is this weekly high over here. That would be the level to start to watch for a rally back to sell at. And hasn't, you know, there's the rally from the closer yesterday to today's high. It hasn't met that level yet. So I wasn't able to get up there. And, you know, I don't like just jumping in at the bottom of a move. There's a little 4-hour range here. If you're prepared to sell on the end of this downward move at the moment, then the 79% level coincides closely to that weekly high that we've moved back below. So 193.29 to 193.52 here. We can look at that on the 15-minute chart. That is this area here. All right, so in my trader, I'm looking to sell rallies. If it's in a downtrend, I'm not going to sell at the bottom of a move. I don't know if price is going to allow me a rally. I just come up with my levels that I would be happy to start to entertain, where I could look to get short on a rally. And I don't have the fear of missing out and want to sell the bottom of a move. All right. Aussie yen. Aussie yen's getting annihilated at the moment, isn't it? So the monthly chart, further month down, high bottom low here to the top. So the trend on the monthly chart is still up, but it does beg the question, failing at this monthly area over here at 107.85 up to 109.54. Are we getting a major long-term reversal? We won't know until we get more months down, but we could, on any of these yen pairs, we could start holding at a 62% retracement or a 79% retracement of the monthly range, because the monthly trend still remains up. At the moment, though, it is looking a little weak. It's trying to move through all these monthly tops that were. We're trading below this monthly top here at the moment, 97.66 just. So over there, I would say I would be a bit cautious on the Aussie yen at the moment. These monthly tops could all start to offer support over the next week. You know, if we start to want to hold above 98.58 over the next few days, support could start becoming in at these tops for a rally back up. Right, so the weekly chart, we've taken out this low, we've taken out this low, and then there's no, of course, there's more lows here that the market can have a go at. Now, if you just got your sell hat on, a very obvious level to try to look to see if we can, you know, if we can't move back above 98.58, the monthly top, that could definitely be intraday resistance for further selling. All right, here's the day chart. Today, we haven't been able to get up to there. There was a closer yesterday. We've only come up short of 98.58. I'm not going to sell into that support level, so I need to see a rally on the 4-hour. Well, there on the, what was the level I was discussing? On weekly, 98.58. Now on the day charts, it doesn't look like we got there, but there was a 4-hour candle in this day that rallied back up to 98.58. So that chance has probably already gone. See it there. So at the moment, if I wanted to still sell, as we're getting lower and lower, what I would need to see at the moment is a clean move away from 97.66 at the moment. Ideally, then, can it rally back to that level to be resistance to trade down? At the moment, that's too close. We haven't had a clear break below there at the moment. Not in my mind, anyway. Let's see what it looks like on the 15-minute chart. I mean, at the end of the day, at the moment, the 1, 2, 3, last 4 candles are all closed. One's tested of the last 4. Current one is testing a little bit, but there's no closes above 97.66. So theoretically, if you wanted to short because the trend's down, then you could be shorting against 97.66, and then you decide where you want to put your stop. So you could be putting your stop above this intraday high, selling here for the continued move down. Personally, as I've been saying on the other pairs, I would much prefer, after very big move down yesterday and the day before, and another move down today. We're 3 days down at the moment. 3 days down in the move, at least. I would much prefer to see 1 or 2 days up and then look to sell. Of course, the market might not do that, and you're only faced with what you're seeing on the chart at the time that you're looking at the chart. So I wouldn't be selling here personally. I would wait for 8 days rally, but that may not come. So you have to decide: do you want to engage today or not? At the moment, it may well hold at 97.66 to move down all day still. You have to make a decision. Do you like that level to trade down from? We'll go back to the daily. So, massive day down there, even worse a day down this day. We are testing support at the moment from the higher time frame. So it's not the best. I don't think it's the best spot to sell at, but the market is bearish. I would much prefer to see on the day chart a day up first of all. All right, Aussie dollar. And the Aussie dollar did have a day down yesterday when the inflation figures came down. You can see the reversal. One thing that's notable is there's lots of wicks on the top of these candles, none of which are coming back up to broken 65.75 support here. So whilst yesterday's candle was a reversal candle, it's only really reversed price action back into this kind of consolidation area, which you can see it's not a consolidation area that's horizontal. It's a little more like so. That's a false break of what I'm drawing in. All right, so price action at the moment is a little bit more like this. So we may just keep going, up and down, sort of, to finally come down and test this low. Really, I mean, we could be bottoming out with yesterday's reversal candle, but until we get above 65.75 here with some conviction, I would look for the opportunity to sell a rally if you can see the opportunity. For our chart, it actually turned up at the moment to a higher top here, but it's just come back into, into that trend line of resistance here that I was drawing in. All right, and forget this move down here because that was a news move. There's kind of a channel here, so this might come back up to into this kind of area to move down. Now, I feel more bullish. You think the Aussie's bottoming out? Well, last week's low, which we're holding at the moment, as we move to the 15-minute chart, this is your area to get long. You could be waiting for some form of trend line break or something, or just clicking in, putting your stop below here because you want to get long, because you think we may be getting support down here. we're maybe getting a little bit of support from this area here, although we haven't quite gotten down to there. But we may get support through here today. So we may have not quite intraday bottomed yet, but we may get some support down in here today. I don't know if we are quite turning to the upside yet. It's a little bit, it's not, Aussie's not as easy over the last few trading days. And as I was saying, just want to go back to the 4-hour chart. This 65.75 level and this 65.68 level there, that's, if I wanted to get short, I would look up here. I'd just be patient to see if price come into this area and want to fail. Because we've had on the day chart many days down here. If you wanted to be short the Aussie dollar, you should have got short by now, because we could be bottoming out here, or it may still have a go down to the low. But you always want to be getting short in the early phase, not in where we could be getting into the latter phase. So we can run it back up to resistance. 65.75 is the level. If we can't, I would just be needing more price action to, ascertain a better area for me to short from if I could see it. I'm not keen to get long because the overall trend's down, but we may need a little bit of a bounce up. New Zealand yen, like all the other yen pairs, so the monthly chart on my data, the all-time high is here, 97.75, which we tried to move above and clearly failed. We're almost back down to monthly support here, 88.16. Monthly trend remaining up within the monthly trends. Almost at the 62 level at 87.52. So at the moment, the question will be now, is this going to bottom on support to move back up, at least within some of the selling of last month, first of all, before continuing down. Weekly trend has been taking out support lows. Next clear support is that monthly high over here at 88.16. Okay, and we're not that far away from 88.16. We are, 1, 2, 3, 4 weeks down. So we can't keep going down week after week after week on these yen pairs without having some relief. We can still continue down for the rest of the year, but at some point we'll have a week or two up, and we're already 4 weeks down. So normally, 4 weeks down, a week up, 2 weeks up, something like that. Is maybe the more normal kind of down rally. So just need to start to maybe understand the positioning of these yen pairs, that we are quite a time frame down now, a whole month down pretty much. We might need to at least rally back up within some of the range of last month. To daily, if you're prepared to be getting short this pair still, you want to look to this area up here. 89.79 to 89.94, the last broken weekly support level here. So dragging the fib in. Don't know if the fib's going to do anything, because the 62 level and the 79% level is going to be above resistance, so that doesn't really help me come up with any useful information. So on the 15-minute chart, so today and into New York yesterday, when we dropped below 89.94 yesterday, you can see the rally in New York couldn't get back to it. It could only get back within a pip or two of last week's low. So the area to look for a short would be 8,900 down to last week's low, if it can rally back up there. Could maybe want to start to hold at 89, but it's very low down. I don't like to sell low down. That's why I was saying on the Aussie yen. Whilst it could hold, what's the Aussie yen doing right now? Is it holding at that level? 15. Maybe trying to get above that level on the 15. It's very low here at the moment. You need a higher level, I really think. Same on the New Zealand yen. Look to a higher level. Look to a higher level if it can offer it you. If it can't, you just remain patient. New Zealand dollar, On my 4-hour chart here, I've got a fib drawn across last week's candle down to this week's fresh low. It's actually stopped at 62 level. So we're having some retracement back up inside last week's range. This could be an intra-week high now to move down. So to the day chart, we've come back down to supports. Now I'm looking for this area of support hopefully to break in line with this double top here. Doesn't have to give me the double top. It could just stay range bound and hold support here to trade all the way back up. So there's a question at the moment is this 2-day rally? Maybe it's a 3-day rally actually. I think we just traded above yesterday's high. Is it just a rally from support, just a bit of covering before we're going to then come down and smash through support? Or are we actually just going to remain range bound? And are we going to move all the way back up to the top of the range? So there are two plays here, really. Which one's going to win out? I'm actually short from up the top, so I'm wanting this to break. If this keeps moving on, I'll just have to jump out my position. So at the moment, trend on the daily is lower top, lower bottom. It is bouncing on support, so there's always a possibility that the range price is just going to maybe stay within this range. And, you know, it could have a day down, form a higher bottom here on the day chart, and then want to come up over the next month, buy all the way back up the range. Let's hope not. All right, so in the 4-hour chart, this intra-week high has come up to the 62% level of last week's low to this new week's, sorry, last week's high to this new week's low. 50-minute chart started to break down in trend. I want to get short this pair. I would be dragging a fib from that high to there and looking into this zone for failure if it can rally. So 59.57 up to 59.62. We do have some US news later in the day at 10:30 and 12. So we could come back up here on volatility rally on the news and then further fail. You can see it's been very choppy in this area. Buyers and sellers fighting it out to win direction. So if you think we're failing at 62 level on that weekly range of last week's candle range, then look to the higher end up here for a rally failure. Dollar Canadian has pulled back. There's a big question as to whether we're just going to stay in the range. All right. But long-term trend is maybe a little bit more to the upside. We have broken out of this range. And as we pull back to here, that's held. Now, I did say watch that level on the buy side on Tuesday, and you can't go back in time now. If you didn't watch that area yesterday, you've missed it. May retest it. So that's the buy side, 37.91. If you can, price can come back down to the area, retest and hold. That's your buy side. If price can't trade and break through 38.45 to 38.61, this is your sell side resistance to trade down from. All right. Same levels as on Tuesday. So it did actually fail at the top that I was suggesting on Tuesday. Trade down to support where I said support was, and support's come in. So the levels remain the same at the moment. Dollar franc continuing down. It's looking for its CPI release tomorrow, but it's still lower tops and bottoms. So rally to about 62 level, moving down. Next level of supports, 87.29. Really want to wait for the next rally to occur on this pair. It's showing you a very clear downtrend on the day chart. conforming within the fib tool. Maybe it will come down to the 127 extension to support for the bounce. But really now you want to be monitoring the next rally. Draw your fib from that high, keep dragging it down if the low keeps moving down. And if that was a low and came back up, the 62 level now overlaps with broken support here at 88.26. So that would be the level to watch at the moment. That would be the sell level at the moment, 88.26 for a rally, if we get a rally. Price keeps moving down, keep dragging your fib down, okay? Dollar yen, big outside monthly candle. Monthly trend does remain up. High bottom to top. We've actually hit the 62 level. So, I mean, all these yen pairs could bottom out over the next week to at least have a rally back up within last month's range. All right. Our level to most definitely watch. Don't know how high a rally can come on this dollar yen, but this is the 2022 high. This is the 2023 high. That could now be a strong resistance level on a rally back too. This is the weekly chart look. There's more resistance there. High, a low there. There's another weekly high here. We move below. So 150.87 is the first level of resistance to rally back to. The next one's 151.94. 3 days down, it's hit the 62 level. So I wouldn't be that confident in shorting at the bottom of this move. You want to watch for a rally back to 150.87. Does that hold a resistance intraday? Or 151.94? I would entertain trying to keep shorting solo down. I'd much prefer to look at 151.94 because the market ahead of the bodge was offering support there. It was only after the bodge cut its interest rates did we decide we wanted to break down. So that now becomes the kind of the golden area of resistance now, really. That's where support was coming in ahead of the bodge. So 151.94 to 152. That could well be strong resistance now. Well worth looking for, can you get a tight entry on a 15-minute chart down from that level if you're running back up? All right, gold. Gold on the weekly chart has had a 62% retracement and it's coming up to retest these weekly highs to the left. It's struggling at the 24.50 level, but the trend is up. So sometimes when you're trading, you know where the trend is, but the market doesn't like the highs and wants to, not move above the highs and becomes a very difficult area to trade in. You've got two weekly highs to the left here that is holding the market. So I don't want to be buying here. I don't necessarily want to be selling either because, the actual day trend is up too. The weekly trend is up. It's just the area that it's in. To the 4-hour chart. Now, the 4-hour range, last bottom's down here to the top. If we could come into, just drag that over to the left. All right, I don't really need that on the chart. Is this range here? Just because we can't hold above these weekly highs doesn't mean to say the trend's changing, but you want to be buying on a dip and not buying too close to resistance. So you've got plenty of price action movement to be able to manage your trade. So most immediate 4-hour upward move is there. So you could watch to the 62% for a pullback, 24.12, or a pullback to 23.99, 79% level. That's got more support here. There's a high here. There's a high here. So that's got more support. So that would be my preferred area to fish for a price pulling back on the 4-hour chart as it starts to turn around. All right, so let's not forget where the trend is. The weekly trend's up, the day trend's up. We're a little bit overextended on the 4-hour chart and it's struggling. Traders take profits at weekly highs. So we are potentially failing at weekly highs. It doesn't say the trend's changing. You want to then allow the market to pull back to where buyers would like to re-engage. And that would be the area. 24.12 down to 23.99 would be the area that I would watch for. All right, that's my view on the market at the moment. We still have some very contentious things coming out. UK interest rate decision later in the day at 9 o'clock, my time. Still just edging down. I'm guessing the market may be, of course, forecasting that we're going to get a cut and maybe more cuts to come. Maybe there may be some verbiage just to say that we'll be maybe further cutting the next month or the next month and the next month after that. And that would, maybe favor the pound dollar moving down if there's still a question about the US cutting their interest rates. Where's the euro? Euro's still pretty much at the low of the day too. In the Aussie is trying to get a little bit of support here at last week's low. All right, I'm going to wrap it up there. Thanks, everybody. If you want to join me next week, just head over to the webinar page. There's the link at the top. Next webinar from me will be on Tuesday, where I'm doing more analysis on the 6th. On the 7th, I'll be going through the 100 pip trade entry setup. So if you want to join me for that, that will be on Wednesday too. And then more analysis on Thursday. So if you want to join me for webinars next week, just head over to the webinar page link up there at the top and register your interest. I look forward to seeing you then. Other than that, stay safe in the market, everybody, and look forward to seeing you next time. Thanks.